Imagine this, you take a trade you've been waiting for all day. You've done your analysis, identified your setup, and entered with confidence. But instead of moving in your favor, the market hits your stop loss. You feel frustrated, maybe even angry. Then a thought enters your mind. I can't end the day like this. I need my money back. So you enter another trade, then another. And maybe you increase your lot size because you're convinced the next trade will be the winner. And then a few hours later, you look at your account and realize the damage isn't from the first loss. It's from everything that happened afterward. If this sounds so familiar, you're not alone. So today we're talking about revenge trading. And one of the biggest reasons traders fail, regardless of how good the strategy is. So by the end of this video, you'll understand why revenge trading happens, how it destroys your account, and most importantly, how to overcome it and become a more disciplined trader. So let's ask ourselves, what is revenge trading? So let's start with the basics actually. So revenge trading occurs when a trader makes decisions based on emotions rather than analysis, and it usually happens after a losing trade. So instead of accepting the loss and waiting for the next quality setup, the trader feels an urgent need to recover the amount immediately, and then the market becomes personal. So you stop thinking objectively and you start thinking emotionally. And the problem is that markets don't reward emotions. The market doesn't even know you lost money. The market doesn't even care that you're frustrated. It will continue moving exactly as it was before. But when emotions take control, traders often abandon their trading plans, you ignore your risk management, and you begin chasing opportunities that actually don't exist. And you may ask yourself why traders revenge trade. So the first reason is ego. Many traders struggle to accept, that you're wrong. So when the market proves you that you're wrong, you feel the need to prove yourself immediately. And then the second reason is fear. So after losing money, traders become afraid that they won't recover it, and this fear creates urgency, and urgency is dangerous in trading. Urgency, kill the urgency to make that money. Anyway, on to the next point. The third reason is impatience. So most people come into trading wanting quick results, and then when they experience losses, they try to force profits instead of allowing opportunities to come naturally, and so you end up being frustrated and you revenge trade. And then finally, we have the emotional attachment to money. So instead of viewing your losses as part of the business, traders view them as personal failures, and this emotional connection often triggers irrational decisions. And now we move on to the next point, which is the cost of revenge trading. What are the consequences of revenge trading? A losing trade is not what destroys an account. A losing trade is normal. So what destroys the account is the emotional reaction to that loss. So imagine risking 1% per trade. You lose one trade, no problem, your account is still healthy. But then you revenge trade, you increase your position size, you ignore your rules, you enter poor setups. Now you lost 5%, then 10%, then 20%. Suddenly one small loss has become a major setback, and many traders spend months growing an account and only a few hours destroying it through revenge trading. That's how dangerous it can be. So on to the next point is accepting losses and making them part of trading. One of the biggest mindset shifts you can make is learning to accept losses. Every successful trader loses, every single one. There is no hidden agenda about that. As a trader, at some point you will lose, and you will lose money. You'll have losing streaks and you'll have winning streaks. That is something that you're supposed to understand and let it sink into your head. Yeah. And so every hedge funds, even banks and professional traders, they experience losing trades. Losses are not evidence that your strategy is not working. They are simply part of the probability game. Think about it. Think about a casino. A casino doesn't panic when someone wins. Why? Because it understands the long-term probabilities. As traders, we need to think the same way. Your job isn't to win every day. Your job is to execute your strategy consistently over time. And once you truly accept that losses are part of the process, the urge to revenge trade becomes weaker. So you need to take a break after losses, and one of the simplest ways to prevent revenge trading is to step away from the charts after a loss. This sounds easy, but it's incredibly powerful. You know, when your emotions are high, decision-making quality drops significantly. You know, your brain is focused on recovering the losses rather than finding opportunities. And that's why many professional traders have a rule. After a significant loss or a series of losses, you stop trading for a period of time. Maybe it's 30 minutes, maybe it's an hour, maybe it's the rest of the day. The goal is to regain emotional balance before making another decision. Remember, there's always another trade, so there's no need to force one today. And we also have another effective way to combat, revenge trading, and it is to establish a daily loss limit. This rule acts as a safety net, So, for example, you may decide that after losing 2 trades or 3% of your account, you're done for the day. You have no exceptions, you have no second chances, you have no trying to make it back. So you say that once the limit is reached, you close your platform and you walk away. And many traders think that this limits their profit. In reality, it's protecting them from catastrophic losses. Professional traders, they focus on staying in the game, and they know that survival comes before profit. And if you're serious about improving, especially as a beginner, start keeping a trading journal. A journal allows you to record not only your trades but also your emotions. Write down how you felt before entering a trade. Write down how you reacted after a loss. Write down whether you followed your rules. Over time, you'll begin noticing patterns. Maybe you'll revenge trade after 2 consecutive losses. Maybe you'll revenge trade when you're tired. Maybe you'll revenge trade when you're under pressure to make money. And once you identify the trigger, you can begin fixing the problem. Awareness is the first step towards improvement. And then another thing, don't focus too much on the money. You judge, as a trader, you judge yourself every day based on the profit and the losses. But successful traders focus on execution. Ask yourself this question: did I follow my rules today? Did I manage my risks correctly? Did I wait for quality setups? If the answer is yes, then it was a successful trading regardless of the outcome. When your focus shifts on money to the process, the emotional pressure decreases. And when emotional pressure decreases, revenge trading becomes much less likely. So at the end of the day, revenge trading isn't a strategy problem, it's a discipline problem. The market will always create winning opportunities. But if your emotions control your decisions, those opportunities won't matter. The traders who succeed aren't necessarily the smartest, they aren't always the best analysts, they're simply the most discipline. So the next time you take a loss, remember this: the goal is not to win every trade. The goal is to protect your capital, protect your mindset, and stay consistent. One loss doesn't define your trading career, but one emotional decision can. So master your emotions, trust your process, and let discipline guide your actions, because in trading, discipline will always beat emotion. If you found this video helpful, don't forget to like, subscribe, and follow Markets for more trading psychology and Forex education content. Thank you for watching. I'll see you in the next video. Bye.